Double-digit inflation is now in the pipeline. That's our top story today on the Wall Report. I'm your host, Greta Wall. U.S. wholesale inflation pressures surged to double digits in February. The Bureau of Labor Statistics Producer Price Index jumped 10% year over year last month, marking an all-time record high. On a monthly basis, prices rose 0.8% versus 0.9% expected. Nearly 40% of that gain was thanks to gas prices, which surged 14.8% annually. Now, the core PPI, which excludes food, energy, and trade services, rose 0.2% monthly and 6.6% annually. The PPI is a forward-looking indicator for consumer prices as manufacturers and service providers pass down higher costs to consumers. And one company doing just that is Tesla. The electric automaker announcing its second price hike in just a week today, just days after CEO Elon Musk sent out a tweet about inflation pressures at the company. Tesla hiked prices on all of its models in the US, as well as the Model Y and the Model 3 in China. Shares of the carmaker rising in today's session. And this decision comes 2 days after Musk sent out this tweet saying, quote, Tesla and SpaceX are seeing significant recent inflation pressure in raw materials and logistics. Now, those rising inflation pressures are also weighing on manufacturers. The New York Fed's Empire State Business Conditions Index plunged 14.9 points this month to a negative 11.8. Now, that's the lowest reading since May of 2020 and sharply missed expectations for a positive reading of 5.5. The index is a measure of manufacturing activity in the region and is seen as one barometer for the wider manufacturing sector. The survey showed both orders and shipments declined into negative territory as costs surged. But respondents were optimistic about the next 6 months, with the Future Business Conditions Index rising more than 8 points to 36.6. And although the Fed is set to announce their first rate hike since 2018 tomorrow, we aren't expected to see any significant impact of that move anytime soon. The central bank kicked off their 2-day policy meeting today with a 0.25% rate hike expected on Wednesday. But several Fed officials have said the bank is at least 3% behind on rates, which means we're in this inflationary environment for quite a while. If the Fed follows the market's current expectations for them to hike rates by 0.25% at all 7 meetings left this year, we still wouldn't reach that 3% by year end. And as the market eyes the Fed, focus is still on Russia and Ukraine. Oil prices falling for the second straight session today, dropping below $100 per barrel. West Texas Intermediate crude futures falling more than 8% to just over $94 per barrel, with Brent crude futures also down nearly 8% to $98 per barrel. This comes as Ukrainian and Russian negotiators meet for the 5th day in a row. Ukraine is still demanding a ceasefire in the country following several civilian casualties due to Russian airstrikes on residential areas. Kyiv is also demanding the withdrawal of Russian troops. And the drop in oil prices is also partly due to China's response to a spike in COVID cases. China is once again locking down major cities despite the so-called spike being small. The country operates on a zero COVID policy, meaning even small outbreaks prompt severe restrictions. The renewed lockdowns hit the oil market with fears of lower demand, as China is the largest importer of crude oil in the world. Now, meantime, U.S. airline stocks are moving higher today after several airlines hiked their annual revenue outlooks. Delta, United, and Southwest Airlines all saying they expect higher travel demand this year than previously forecast as the Omicron surge wanes. Now, the Jets ETF is rising sharply today, and the fund holds shares of all the major airlines in the U.S. The airlines are expecting sharply higher jet fuel prices to cut into their profits a bit, but say rising demand should outweigh those higher costs. Delta specifically said its bookings for 2022 are already outpacing 2019 levels. Now, looking ahead to tomorrow, the day will kick off in the morning with February retail sales data at 8:30 a.m. Eastern. Economists are forecasting a sharp slowdown last month as inflation pressures did hit a new 40-year high. Be sure you're subscribed to my Coffee with Greta newsletter to get all of those details ahead of the market open. There's a link in the description box below to sign up. And of course, tomorrow afternoon is the Fed decision. The central bank announces its rate hike decision at 2 p.m. Eastern. Let me know your predictions in the comments. The market is broadly expecting a 0.25% rate hike, but could the bank go with 0.5% instead? I'll see you all back here for the Wall Report tomorrow. Be sure to give this video a like before you go.